Hello, fellow traders. 'Tis I, the Rumpled One. It is December the 20th, the year 2017. It's Wednesday, crossing over. But before I get into today's video, I want to ask you guys a favor. On my channel, in my threads, can you guys keep it civilized, please? There was some unkind words going back and forth between a couple of traders on a couple of my recent videos. So can you guys just knock that nonsense off? I mean, look, we're here to help each other and to make money, so we don't need to call names, being derogatory, questioning somebody else's intelligence. We don't need to do that, okay? Yes, I call people Yale students, but that's all in good fun. But you guys know what I'm talking about. So, like I said, let's just knock it off and let's just stay focused on the topic. I welcome any debates, but so long as it's about the topic and we're not talking about each other, okay? So, no more killing the messenger. Enough said. Crossing over. As always, I'm putting up the money and risk management screen just for a few seconds. A friend of mine asked me to modify an indicator, or if I could do an indicator. So I did it for him, and I'll show you that in a few minutes. But really, every trade that we're doing, it's a crossover trade, meaning price is going to cross over a mark, and that's all we're doing. We're just doing crossover trades. It's that simple. We put a horizontal line on the screen. Once again, no squiggly line indicators are harmed in the making of these videos, and that's all we're trading. It's simple crossovers. And once again, in case you missed yesterday's video, all the weekly gaps have filled, and you can see the distance. Prices moved from the weekly open. You see that. We drill down to the daily chart, and we can see once again it crossed over yesterday's high, came back into that wick zone, crossed over yesterday's open. Actually, it went this way. Sorry. So you can see it crossed over there, into the zone, out of the zone, and it came back through, crossed back. So once again, it's all crossovers. It's just that simple. Here we have the wick zone. I wonder why they got scrunched like that. Here we go. And I'm sorry, this is the buy zone. Okay, you can see here it popped on the weekly open, but it didn't cross over, and it's coming back the other way here. We're doing the Swiss franc this week. You can see here we had a buy zone trigger, took some heat, and then it paid off. So depending on what session, I think this is the London guys right here having fun. You can see it's a crossover. It's so simple. And in the rat zone, once again, we don't have enough distance to really be trading the rat zone, but you can take some price action trades, near the high or the low, taking those price action trades. That's the current daily high and low. And then we've got the pivot. You can see here's the pivot, there's the open, the pivot point fade, paid at least 7 pips there. So that pivot, and it went all the way to R1, seeking R2, but now it's retreating. And you can see here that future pivot point, it came right back to it. Once again, this is such simple stuff. And just so you know, if you're wondering about this pivot indicator, I didn't write it, I modified it. It's the SDK pivots. That's one of the things, and that's why when I put my code out there, I put the source code out there. Some coders don't like to put it out there. They want to keep their secrets so they can be the wizard, the magician, and have everybody dependent upon them. But in fact, I just read an email talking about who dug the well. In other words, who came before you, did the work that now you're benefiting from. So that's why I put the code out there, so somebody can take my code and take it to the next level. And I put it out there so, even if you're not a coder, you can use it. So once again, you can just remember, because somebody dug the well for me, taught me, trained me, showed me. So I learned it, took it to the next level, and so hopefully somebody will take my stuff to the next level. So it's all about sharing and caring, guys. We're in it together, even though we're all competing against one another. Just like on NASCAR, some mechanics will help the other guys. If they need a tire or a spare engine, they might even loan them because they'd rather have the guy out there on the track to race against than be out there by themselves. That's just how it is. And the same thing with coders. We help each other because we don't know it all. We can't. I mean, there's more new stuff coming out every day. It's impossible to keep up. It really is. So back to trading. Simple price action. Green. This is funny because you could just see here the price action on M5. I mean, just look at that. I mean, if you were sitting there trying to scalp those 4, 5, 10 pips, I mean, it was this type of action is just made for that. And you can see we've got some 2, 3 pip long candles here. So for those who like to take those quick pips, looks like today would have been your day. And here, looking at just the 5 lines, once again crossovers. We're using the H1 candle color here. Maybe I should put that magnified market price out there. But you can see here, just trading with the candle color at the line, the H1 candle color at the line. Rule of thumb, do not trade against the H1 candle color. I've been saying that for years, and it's been working for years. So just don't trade against it. But that's quite the pullback there. And you can see the wick zone. It popped out, in and out, in and out. It's the same thing every day, guys. Once again, it's a crossover trade. These are the points of the crossover. And the holo setup, it's the same thing. We've got these horizontal lines here. In this case, the highest open, and it came back down. That's the H1 highest open. Here's the H1 lowest open down here. You can see it just, but now it's heading back that way. Okay, the new chart with the indicator my friend wanted. He wanted to draw, actually this is a box from the previous 7 bars. And actually this isn't the one he came up with. This is the one I came up with. This is my red-green candle box. I'll have to show you that one, the other one, another day. And so what we have here is, this is the current candle. So it's the last bull or last bear or red candle and the last white or most recent white candle. So we're not looking at the current. So you see we're drawing a box here. Why would I do that? Well, if you remember the turn trades, the turn trade is at the bottom we've got a color red candle. We've got a bear candle here followed by a bull candle. Now what you want to do is take the break of that bull candle high in this instance. But sometimes you'll get a a bear followed by a bull, and the bull will break this high. So I was thinking about that. So right here you can see there was, if you took this trigger right here, it popped up a bit and now it's pulled back. And just so you know, the purple dots are the pivot, the pink dots are the previous midpoints. Okay, and that's all with the TRO mid dots. And these are my newest ones. I haven't put them out there for public consumption yet. Still testing, debugging, making sure they're the way I like. Okay, so once again, simple. We've got this last bear candle, so we're going to look for a breakout. We've got the last bull candle. Once again, we're going to look for a breakout or a crossover. It's all about crossovers. We're just going to get those crossovers, you know. But since it's a range, we're talking about a breakout of a range. But a breakout is simply the crossover of the high or the low of the range. So it's all crossovers. If I said that enough, it's all crossovers. And if you're wondering here, you know, this was the price action multimeter, and you can see here on D1 we're looking to go up, but we can drill down here. I turned off the colors because it was confusing some people. So you can see here we had a bull candle followed, and we have a bear candle, and we take that breakout. Look what happens. Okay, so because if we were waiting for a turn trade, which is right here, we would have missed a whole bunch. Now sometimes you miss, sometimes you don't, but that's just more price action, you know, drilling down and really looking at what's going on. See, here you have a bear followed by a bull, and it goes up right there. It broke it. Here you have a bear followed by a bull, but it hasn't broken it. So you see here, that would be your trigger line. And the reason is because you're making higher lows. Now, of course, you don't know that until after the candle closes. Anything can happen. I'm well aware of that, and that's just how it is. So for example here, this is what I'm talking about right there. That was the trigger. It already covered and it headed down. I hope that's clear. Now, just so you know, this is the new multimeter, the pivot point fade. So right here, we're on H1. It's saying we should be fading to the pivot. That's if you want to take a pivot trade. Okay, and we're on, so H1 fading to the pivot, and you can look back here. Oh, there was a missed pivot, but you can see over here it got covered. Let's see, missed pivot. Looks like that one got covered. So for the pivot traders, as you can see, price just seems to tend toward those pivots, and that's even on H1. You know, you can even do this on the weekly, and you can do this on the monthly. And you can see how powerful this can be. See here, that pivot was missed, and it got covered. That pivot was missed, it got covered. That pivot's missed, so maybe somewhere in a few months it'll get covered. Let's say it took this one 1, 2, 3, 4 months. I don't know if anybody wants to wait that long now to cover, but it's something to think about. So, fellow traders, I hope everybody's having a good week, profitable week. And please keep it civil out there on the threads I post on in my YouTube channel. Be nice to each other. And as always, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.